let's now welcome on board Saugata Gupta, MD and CEO at Marico, joining in on the show right now to talk about, where the domestic volume trend is headed and, of course, what is the management now guiding, looking at the trends on the ground. Saugata, great to have you on the show. Channel checks have been suggesting that your demand has been weak for the company, actually. How's the on-ground situation right now? And what do you think is looking like in terms of demand trends for the second quarter?
So as you know, in quarter one, a significant contributor for the decline in volumes was Saffola, and because of the combination of very high prices, also a significantly high base in the previous quarter one because of significant in-home consumption. I think we are seeing a far better improvement in volumes in Q2. And I believe that we have been able to execute pricing action given the input costs, which on edible oil, which came down significantly sometime during July, August. We have been able to execute that in the market, and we are seeing much better results. So therefore, that will have a better performance. Similarly, foods which at a high base is doing well. So I would see a gradual improvement in volumes. Q2 will be definitely much better than Q1. And then we believe that in Q3 and Q4, it will get normalized.
Now you have a 8 to 9% aspirational volume growth target. Do you see that you could achieve this kind of a volume growth in this year itself?
So I think this 8 to 9% is a medium-term volume aspirations. It will still take time because at the end of the day, if you look at the input costs and the overall situation in the economy, I think while a lot of correction is happening, still there is some crude needs to be corrected. Also, overall consumption, while it is improving, it needs to significantly improve. But what we can look at is, as I said, healthy, positive volume growth in the second half and an improvement coming from Q2 to Q1, where we believe that obviously even in Q2 you will see a positive volume growth, but gradually improving to a good modest from a modest growth coming in Q3 and Q4. But again, as I said, it's difficult to give a number, but I believe that in Q3 to Q4 it will be almost near normal.
You've given a guidance of 18 to 20% margin given the input costs they continue to rise. Are you looking at upping up this guidance?
I think ultimately we have to drive consumption and give consumer the price advantage so that volumes go up and we continue to gain market share and penetration in most of the portfolio. As far as margin is concerned, I think we have given a 18 to 19% overall full year guidance. The way we see it as we will see a margin improvement in the second half. As far as the quarter two is concerned, as you know, you hold stocks at a high cost. We also have taken aggressive price drops so that we get the volumes back. So you will see the margin impact mostly in the second half and not in Q2.
Now, what have been the planned price cuts for Saffola, and how is it performing in the portfolio as of now?
So Saffola Gold was 230 per liter. It's we have taken, I think, 3 price drops. It's now at 190, and I think Saffola of late the performance has significantly improved.
So Saugata, what about rural demand? Is it still looking a little bit sluggish, and what's the outlook in comparison with urban demand?
So first, let me take urban. I think urban, especially discretionary, we continue to see volumes continue to pick up, and in a lot of categories, I think it has crossed the pre-COVID levels because a lot of discretionary products were not doing well, especially in the HPC in the sector. As far as food is concerned, food had a very high base last year in Q1, but we are seeing a significant improvement in foods because we are now working on a normalized base. So therefore, the run rate seems to be good. Digital brands continue to do well. As far as rural is concerned, I think there's a gradual improvement. There is still obviously some slight inflationary pressures there. It will take a little time. There are, as you know, in Q1, we noticed some kind of a downtrading and downgrading happening. But we believe that so far, I think, while there has been some exceptions in certain states, the monsoon is okay. And I believe things, and especially the fact that last year, second half had a lower base. So I think we will experience a better rural growth in the second half of the year.
Right. You've made many new launches in the food business in the last few years. Has it met your internal targets, and are there any challenges that you all are facing?
So I think we have looked at our aspiration of 850 to 1,000 crores by the 23-24 is very much intact. We are reasonably on track. We are extremely confident of meeting those numbers. As I said, in Q1, it was slightly slow, the growth, because of the fact that we had a very exceptionally high base. We continue to, and of course, with that high base also, as you know, 100% of our food are in-home, and we had also a lot of our portfolio was a health and immunity. So that had a very high base, but things have sorted out, and we continue to now get that growth, sequential growth. And given our aspiration, we are very much on track as far as food aspiration is concerned.
Okay. So now in the food business, are you going to go in for organic or inorganic growth? And any niche new categories that you're looking to enter specifically?
So I think we have already taken a majority stake in True Elements. I believe that there is, Saffola is a classic case study of how to drive total addressable market expansion using a very powerful brand. I think the journey is still incomplete, and there is enough opportunities for Saffola to grow in better for you, whether it's breakfast in between meals. Similarly, True Elements is a very, very strong brand, and it will operate at the premium end of the market. We have not yet exploited the distribution expansion of True Elements. So a combination of this, I think, is enough on our plate. And obviously there would be some entry into some new categories over the next couple of quarters. But I don't see ourselves really, I think there is enough opportunities in the organic growth opportunities which we have to ensure that our aspiration of 850 to 1,000 crore is fulfilled by 23-24.
So the competitive intensity in WHO, which has led to muted demand for the company, what is your strategy here now, and how do you are looking at maintaining your market share?
So we have continued to gain market share, value share and we have not been a single year where we have either volume or value share we have lost. I think what is happening is there is significant competitive intensity at the bottom of pyramid. Having said that, our market share at the bottom of pyramid is strong, where we have to defend our market share. There are enough opportunities in the middle pyramid and the top of pyramid where our market share is lower, and there are significant, whether it's through, whether it's hair fall, especially which we are now doing with onion oil, and also with some of our other brands in the mid segment, which continue to now drive growth. So I think we will continue to grow ahead of the market. As you know, the volume thing also we need to take into account that in order to address some of the inflation issues, we have also taken MLH drops in some of our brands instead of just taking pure pricing, and therefore that is also the reason. So while transactions have not got impacted, but sometimes volumes get impacted because of this reason. But I believe that again, as we move into the second half, this will get normalized slowly.
All right, Saugata, really appreciate your time. So glad you could join us. I'm just going to scan the markets once again, and it's IT all the way.